And while Transaction Capital's first half headline earnings per share ticked up 10.5% to 40 cents. This as the lender recorded strong revenue growth and an improvement in operational efficiencies. Joining us now from the JSE to unpack the numbers further is the company's CEO, Mark Lamberti. Good afternoon, Mark, and thanks so much for joining us. Well, these numbers coming through in a very fragile and vulnerable economic framework at this stage of the game, and with things looking to get trickier. Before we look at prospects moving forward, take us through what for you the highlight was of the year that was.
Well, there are a few things. The first is that these results were impacted by about 870 million rands of new equity that came into the company, and with that an issue of many new shares. So the underlying performance of the group at a headline earnings level was about 36% growth, with that was reduced to just around 11% because of the new shares.
Mark, it's Lindsay in Cape Town. One of your comments is the following, and I want to read it to you now. It says, unsecured loans continue to be a necessary and valued source of finance, particularly for the 94% of South Africans without a home loan. I always got the impression that after the African Bank statement last week, that you might have been sort of scrambling to rewrite your press release following the numbers that you've just produced. Was it a bit of a shock to you, and does it have an impact on the way that you do business in the future?
Well, no, you know, our unsecured business is 38% of our total portfolio, and we have been signalling for some time that we felt the market was going to slow. We slowed origination considerably over this period, and we've taken a very, very conservative view. It's quite important to remember that we're only a 3.3% market share in the unsecured market, so it's possible for a small player like ours to be very selective about the credit that we grant and to be nimble in the way we manage that credit. So, you know, while some of the larger players have got to deal with the macro trends in the environment, we can move around those and be more tactical.
Having said that, Mark, what's your assessment of the current landscape? Because, you know, if you're looking at the lower earnings or lower income households specifically, you've highlighted in your report that the pressure that's being felt there is offset partially by social grants on the one hand, but then also informal economic activity, which is more diverse, widespread and robust than generally reported. To what extent are we underestimating that force that lies in the informal sector of the economy?
I think the under-reading is quite considerable. You know, we see in two parts of our business, we see the informal economy in full swing. Our taxi business, for example, is a good one. There are about, at the moment, something like 200,000 taxis in the national fleet. And I would guess that the taxi industry employs something upwards of 400,000 people. And all of that is very much a cash economy that's not monitored in any way at all. Another example of the informal economy that we pick up is the amount of cash usage through our 4,500 ATMs. Half of those ATMs are in rural or peri-urban areas, and we can see that the value and the volume going through those ATMs is rising. So I think that these are some indicators. There are others, but I certainly don't think that the economy would be performing the way it is if the national statistics of a 25 or greater unemployment rate were not supported by some other income.
It's quite fascinating actually to hear what you're saying, because it's almost as though there's an economy that's not reported upon on shows like Power Lunch on CNBC Africa. There's a whole business out there, there's a whole economy out there that is operating not beyond under the radar screen, but certainly not, as I said, not reported upon by mainstream media. You talk about 38% of your business being unsecured in the unsecured market, and you've mentioned the taxi business. Tell us about SA Taxi and Rand Trust. How is it going?
Well, SA Taxi continues to be a fascinating business. I think we differentiate ourselves from most other vehicle asset financiers there by virtue of the fact that we assess the operator's route in our credit granting criteria. We make sure that we are granting credit on reliable premium vehicles, and we also monitor the individual, and we put all of those things together to grant the credit. But probably more important is that on repossession, we refurbish those vehicles through our Taxi Mart facility, where we invest a great deal of time and effort in putting in new engines, new gearboxes if that's what's required, panel beating, fixing up the upholstery, and reselling them at a price which realizes a greater value than we could on auction, net of all of the costs involved in that. So we have a somewhat vertically integrated business there, dealing from inception and granting of credit right through to the resale of a repossessed vehicle.
Of course, you've highlighted that you don't just evaluate credit on just the credit worthiness of an individual. You're looking at an array of factors and take that into consideration. How do you factor in the state of the industry itself? Because this is an industry that many would say is fraught with complexity, Mark.
Well, the rough numbers, as I say, about 200,000 vehicles, only about 60,000 of those are financed. And we finance about 23,000 of those. So there's probably 140,000 vehicles out there that over the next few years have got to be renewed, and we see a massive market opportunity in replacing those vehicles. You know, a little bit of anecdotal evidence that might be interesting to you is that we know that certain commuters on the side of the road now don't put up their fingers to signal where they would like to go if they see a really dilapidated taxi come past, and they tend to wait for the better one. So the commuter themselves is starting to become more selective in choosing what looks like a more roadworthy vehicle. And we think that actually lifting the state of the nation's taxi fleet is going to be important. And we don't believe at all that public transport is going to be able to supplant the need for those vehicles. The rough figure that we have is something like 14 million people a week are using taxis. So, you know, that although the industry may be somewhat unregulated from a formal sense, it is quite regulated through the taxi associations and through who's allowed to get routes and permits. And it's an environment in which if you understand the risks, one can finance these vehicles quite safely.
Mark, I wish those same consumers, commuters rather, would be as proactive when it comes to the driving habits of the taxis that you're funding with. That's another story. Every time I go around Hospital Bend on my way home from CNBC Africa, there's all sorts of things going on there, but that's another story. Let me go back to the unsecured space as well, because I mean it is in the public consciousness at the moment. Here's a report I want to read to you from my phone here. It says the near certain decision by government to introduce a second credit amnesty after the spectacular failure of the first one in 2006-2007 will only provide temporary relief to deeply indebted consumers, and it goes on. What is your view on this particular legislation should it go through?
Well, my understanding is not that people will be allowed to be let off their debt. The credit amnesty was to stop people being penalized on their credit records with fairly small amounts of debt, and the rationale being that people are unable to obtain certain other kinds of credit because of a very, very small default some years back. If that's the case, I think it might not be detrimental, but anything bigger than that could be very dangerous.